So, but he tried to make humor out of it because he was in a subway. He tried to sleep. He actually had to sleep with his son in the toilet, but to get to his son to sleep in the toilet was another story. It was very humorous. Now, very quickly, now this is the gist of the matter. SME package illustrated. This package is called the Enterprise Comprehensive Insurance Package, which covers business premises like fuel stations, supermarkets, shops, bars, pharmacies, any kind of business. But the most important thing, we need to value, or we need to establish in this to get the computations of how much premiums we are charging, is what we call the maximum stock value. I hope we are together because now this is the gist of the matter. Now, when you talk about maximum stock value, like any business premise, any business person, even though you have you're just renting space, you have a warehouse, you always know you must always give us as insurer the maximum stock value. So this is an example of say supermarket. It could have an inventory of maybe 100 million or 200 million on a particular day, but they also have peak times, peak seasons. That is maybe during Easter, we're coming out to Christmas, we're coming to holiday time. They usually stock more, and they're actually doing stock taking. So maybe they have to give us the maximum stock value that they can have at any one time, not just in the low season, but in the high season, because that is what you need to cover for the whole year. We don't want you to keep on giving us different values every month or every quarter or every season. No, take out one insurance product for 1 year, then you need it. You can renew it if your business has grown or if it has reduced. You give us another value, but looking at what we call the maximum stock value. Now, this rate you're seeing on top is an average of other classes that we have used, and the classes we have used. Okay, allow me to first take you through the sections of insurance, and then I'll take you why the way we computed the premiums. Are we together? Ronald, is that okay?
Yes, please. Yes, please.
Okay. Because for me to explain how we charge it, you need to understand what we are covering. What is that insurance risk you're transferring to the insurance company? Yeah. So this is a scenario. If we look at the sections incorporated in the Britam Enterprise package, we are saying that first is fire and allied perils. When you talk about fire and allied perils, we mean fire, anything that is going to destroy the premises of your business. Yeah. So even though you're renting, but your landlord has a business, an excavator near his building, like we saw at Wandegea. There's a building in Wandegea, actually in Makerere. It was near Ham Towers. It collapsed, midway. I think that was around 2018. Not remembering so well the year, but we have so many examples of buildings that have collapsed, and the tenants' merchandise also gets destroyed there. Now, if you are not insured your merchandise, you will actually lose out. So the allied perils mean anything that is going to destroy the premises totally, where you are renting or where you are operating your business from, no matter the shop or a pharmacy or anything. So we know that most businesses just rent out these buildings, so we don't insure the building. Unless you own the building, but you can also cover it as well. But here we're looking at Omuntu Awansi, an SME, normal person, who is just renting. And then they have their stock. That is also another important element that we have to take into consideration. This is an example of someone who was having stock of about 300 million, 200 million, but in his peak season, he knows that he can have value of about 450 million. And then he also has tenants, fixtures, and fittings. These are the chairs, the computers, the phones that you use in the shop to attract clients, the signages, everything. That also covers about 10% of the business value. So here we are seeing the benefit we are covering is about 500 million. Then there's what we call business interruption. This is loss of income or increased cost of working, which is about 15% of the business value, and recover it within 180 days. So what does this mean? This means that if now the fire hazard, number two comes as a result of number one. When a fire hazard has happened or a flood or anything, it will take some time before your building is renovated or put back to its current state. So you as a business owner, you need to think fast, and this package helps you get money, about 75%, okay, 15% of the business value, which in this case would be 75 million. And this money will help you relocate, look for money to relocate to another shop, because you as a business owner, whichever day that you spend without working, you're losing revenue, you're losing out on your market base. So you have to look for a quick solution that is going to help you put back yourself back into business. So this business interruption factor help you get some money within 180 days. That's about six months, to look for an area, to market your area that you are going to be in, because you don't want to lose your clients. Thirdly, we have burglary, and this is also very common. This is a concept. I mean, as long as it's forceful entry, we're covering about 10% of the business value under what we call, it's a terminology we call first loss basis. We believe when someone breaks into your shop, they're not going to come and steal everything at once. They'll only steal what they can carry that particular time. That is why if you have bulky items like clothes and all that, we believe it can only be about 10%. But if you are dealing with accessories, phones, machines, those ones you should increase your percentage. So each business can be different. Number four is money insurance. We have to cover money in transit, and this is also targeted. Actually, before, in the past, the traditional insurances could not give money insurance to business people or SMEs. They were only giving it to financial institutions, banks, microfinances, and the like. But now we are in an age where insurance companies are also adapting and also trying to give a better solution, a better package to their entrepreneurs. So we shall also cover the money that is in your business premises, but you have to always give us the stock level that like what is your float, what is your maximum float that you have at any one time, and we compute all that for you. The money with the managers, the accountants, the money with the distributors, things like that, we can cover all that. The damage to safe, but we must endeavor that you have a safe in your business premises. Now, number five is goods in transit. Goods in transit is, I noticed it with Indians, and Indians have it so much, and that's why I think they're a little bit thick compared to us, Ugandans. And the normal way we do business, because you don't have no other value addition. Now, these Indians I saw, actually, they allowed me to use their name, Elite Digital. These are suppliers of phones, of Apple products in Uganda. They actually have an insurance embedded in all the sales they make, such that for you, once you buy from them, they'll tell you, once you have delivered, once you bought an item, you made an order, we are supplying it to you, and it gets a problem in the way, before it reaches you, we are going to take a cover. We shall just replace with another phone. I've seen some hardwares where they say, we are going to supply, for us, the benefit advantage we are giving you, we are going to supply you maybe 50 bags of cement, we're going to take them up to your place in Entebbe, right from Kampala. But he will also tell you that should anything happen to that cement on the way, the truck, because many times people don't own, the business owners may not own the trucks, but they are just they are hiring these trucks, people are using that service. If that item does not reach the client and it gets damaged on the way, even if the client has already paid, we are still liable to pay that. If there was a goods in transit cover, we shall compensate for that item worth 10 million. Okay, worth 50 million, 10% of the business value. Sorry. Okay. And then number 6 is public liability. In case you're sued as a business, and this happens a lot to consumables, supermarkets, or pharmacies. If your items in your shop can cause damage bodily injuries or they are expired or something like that. If one of the clients there can show evidence and they sue you in court, of course, court will slap you with a fine or a penalty, and that is, we can pay up to, say, 100 million. It's just a minimum. This is an illustration. So depending on the value of your business, it can go higher or slightly lower. But that is usually the amount that the courts will charge you for. Then, very importantly, number 7 is the goods group personal accident or workman's compensation, which can also cover all your employees against accidents on the workplace or even outside of the workplace. And our employees actually suffer accidents, whether on border, they are delivering things, or having worse things happen. Accidents are part of us, and we can actually work out. Maybe there are 2 methods that we use to compute group personal accident or workman's compensation. There's what we call 5 years basis, which is actually the minimum stipulated amount. Okay, it's the law. It requires we have to pay 5 years earnings should someone get an accident when they are still employed with you. And you're actually supposed to compensate that money. If you did not have it, I mean, if you did not take out this policy, you will have to, by law, you're supposed to pay that person. If that person takes you to the labor office, or if their family members take it to the labor office, they say that this person was working for this particular company, this particular SME in town, and they got an accident on the workplace. The law stipulates that they must be 5 years earnings. So if the challenge, of course, we have seen with SMEs is they don't have formal contracts with most of the employees. So the employees are informal workers, they are casual laborers, or they are working on a wage. So we can work out another method, what we call agreed basis, where you can say, if you have certain employees, we can agree that let's have up to 10 million shillings that can be paid out to any of them should any accident happen on the workplace. And we shall charge a small rate of about 0.3% of that. But as I've explained now, all the benefits, and all these benefits are worth, if you're seeing the total insurance benefit is about 900 million. Now, much as the basis of, let's go back up here to where the premium is, you'll see that actually the premium here we are charging is about 4.2 million. And it is best, okay, the basic premium is actually 3.595. And then we go to, there are some other levies, or what we call training levy for our, I'm actually going to invite these guys one of these days to the Insurance Promise Show to tell us why they are calling it training. Yet they are not training the public. But idea, it subsidizes as the insurers, as the insurance practitioners to get subsidized training costs. That is the reason why. And then there is a VAT, 18%. So that comes to 650,000, and then 35,000 for stamp duty, URA, and then the gross premium would be 4.298 million. Now, this is sometimes also a challenge for our clients when they can't afford this amount of money from their business outflow. So we can arrange for what we call insurance premium financing with our partner banks, who will charge you 10%. They can even charge up to 8%. It's negotiated, but this is an example of where they charge us 10% per annum. That is per month. That is about 1% per month is what we will be charging on your premium without any extra collateral. So out of your 4.2, instead of paying 4.2 million, you can write 10 checks of 429,000 to the bank. Then as the insurers, we guarantee this insurance, it will be a loan. And then the insurance, okay, that means the total installments will be 4.7. But again, it will help you as a business, it will help with your cash flows such that you don't suffer so much. Because should any incident happen, because there's a cash and carry policy as an insurer, okay, this came last year, and it was also enforced by the IFRS system, which is requiring that all premiums are paid upfront. So instead, if you don't have all the money at once, we can arrange with a banker to charge a small interest of 1% per month, or less. But at least for them, the moment the first premium gets to their account, they release all the money to us as the insurers within 2 or 3 days, so that you have the full benefit of the insurance. The only challenge is if you forfeit or if you fail to pay up your premiums in time, then of course they will come back to us and we have to pay that money. So really, let's not go into that. But it's also an option, because if I'm presenting to traders and SME sector, that is something that is very alive to us. We need to provide solutions. Okay, so let me just share my last slide, and then we can go to any Q&A. Now, the last lesson I learned from this movie and the book, Pursuit to Happiness, is most pursuits for happiness may never end. So no matter whatever shocks you go through, and you're able to bounce back, like when you see this picture on the left, this was me in 2020. As you can see, I was being taken from the ICU. I had they had cut this head into two to remove the blood clots, and they had to sew it back with staple wire. So that is how I recovered, and I spent 1 month, but I feel like I was given a second chance to life, and I'm like, this guy here, Chris Gardner, yeah, when he had just graduated from his school, I mean the course he was doing, to become a stockbroker, and it had taken 6 months. Imagine he was spending 6 months just selling the other scanners to make ends meet. So with that said, I want to thank you for your time. This is the office of Britam in Nakasero. For those who knew it in the past, about 2018, this was the office for AIG, but AIG left Uganda because, again, there are so many challenges of operating business in Uganda. They left, so we bought their business, and here we are. That is the Britam Tower. Thank you so much. I'll take any questions at this stage.
All right. Thank you so much, Emma, for that comprehensive presentation. We want to thank you for sharing sharing on a number of subjects. I wanted you to go back to, yes, that page over there. I think a lot of questions may arise from there. I'll give an opportunity to a couple of people. If you can put up your hand, you can just put up your hand and ask. Also, feel free to use the chat box to be able to ask a question. We have a question here from Lucia, who says, if I'm importing a machine, e.g. from India, and I just want to insure the particular machine as well as I have not been your registered member, how can I do that? And if the machine gets broken, how do you compensate me? And I think is it broken during transit or it broken after it arrives? How do you compensate me? And if the machine gets broken, how do you compensate me? What amount am I supposed to pay to insure that particular amount? Emma, you can touch on that question. I'll give an opportunity to anyone who has a question to ask. Please do put up your hand so that we can be to address those questions. Emma, you can answer Lucia's question.
Thank you, Lucia. Let me quickly answer that one, because that is now speaking to another subject that I did not talk about very well as the insurance industry. That is the local marine insurance services that have become law as of this year in July 2022. So meaning every time you are importing anything in this country, you must use a local insurance company. And the benefits are also immense. Here it is under Section 5, but Section 5 is goods in transit. Goods in transit is within the board, within Uganda, and items moving there. But if you're importing outside of Uganda, then it becomes marine insurance. And the marine insurance that was being done in the past was, okay, before this year, was most importers were using their foreign insurers or the suppliers insurance company to get insurance from the port of origin, wherever they are coming from, whether China or India, name it, Dubai. There are so many countries that we import from. So but that insurance would only end, and that is if you have gotten the certificate, the insurance cover itself, because many people were also being charged for it, but we are not being given the certificate. And once there's no certificate, URA would penalize you. But very quickly, what to point out why the benefit of the local insurance company, of marine insurance, was to extend that cover beyond that port of destination, because previously the exporters, the suppliers in foreign countries would only, the policy would only stop at the port of destination, in which case most times it is Mombasa or Dar es Salaam. So imagine from Dar es Salaam or from Mombasa up to Kampala, the risk is on your side. You have no backup of whatever machine you have brought, whether 100 million or whatever you have spent. You have sent out of money, the machine has reached, but there are so many other risks also from Mombasa to Kampala. So how do you manage that risk? Just transfer it to the insurance company. We shall charge, usually you have to send us a pro forma invoice. Of course, I'll share my details. My details are I'll share them in the chat room so that you can always reach out and we quote for that marine insurance package up to Uganda. So that one is covered separately because it is covering different jurisdictions. What I'm covering, what I have explained today here is for business that is already here. But if you're exporting or importing, then you have to use the local marine insurance policy. And that is another discussion that has been pushed around. Okay, we're trying to do a lot of sensitizations of late. Thank you so much.
Thank you, Emma, for that response. If there are any other questions, please do reach out. Don't hesitate to reach out. And Emma, I think for me, I wanted to just ask on, you talked about fire, you talked about business interruption, you talked about burglary, you talked about money. How do they blend? Are these clearly defined, or any of those which happens can be able to bring me to getting an insurance cover?
Okay, this package that I've shared has to be a package, because if you have to get each policy separately, first of all, it becomes expensive because each policy will attract a different tax, different stamp duty. Yet, if you have them as a package, and these are packages, there are risks all encompassing a business owner. Yes. So getting just fire insurance without getting group personal accident for your workers, without getting public liability, because you can also be sued, without getting money insurance, because your business also has money, then you are actually under insuring. You are not really giving a very good option or solution for your business. Yes, we can cover them separately, or you can cover you can choose to opt out for and say, I want most businesses we have noticed, we have observed, only insure when they have loans. So if the bank is going to give you a loan, they will want you to insure your property, your vehicles, your buildings, you will insure them. But when the business loan is fully serviced, you will stop insuring. Why? Because you're only looking for the loan, and that is it. Which is okay, because the financial institution is also, for it, it is aware and it doesn't want to take anything to chance. So it will enforce that you take out an insurance policy. And you'll have to, of course, our bank has become also, okay, they are our partners, we like them, but as my business and the people I train, my agents and all that, they are our competitors, because for them, they have a bigger hand or a bigger stake, because they are giving you money. They will want to put what they call a lane clause. And they're the first payees. Should anything happen, we have to pay them first, or they have to make sure that item you have secured, you have given them as collateral, has to be replaced by the insurance company. So they make sure they get that money, they either pay it, or they pay to the garage, or they pay to the construction person that is going to do it. I think that is how I can answer it. I don't know if you want me to clarify further. Thank you, Ronald.
Thank you, Emma. Great. I'm trying to, if there are any other questions, we can just throw them in the chat box. And in case we, great. I think I'm not seeing any questions come through. Great. I think for me, the key message which comes out is that we need to, the opportunities which a couple of insurers give to be able to amalgamate and bring this risk together so that we can be able to manage it in one package is a very big opportunity. And I think what's important is to see how we can be able to reach out and get and be able to get these services. I think I see Godfrey. Godfrey, do you have a question?
Yes.
Yes, please go ahead, Godfrey.
Thank you very much, Ronald, for the opportunity. Thank you very much, Emmanuel, for the presentation. Mine is just a question on your for all those the percentage consolidated for each policy has percentage. Those are my questions.
Godfrey, you're breaking totally. We can't. Maybe you post it in the chat room so that we can read it properly. But I've not heard him. Unless if you have heard him, Ronald, you can repeat for me.
I think I missed a bit of what Godfrey said, but I guess it was something. I think Godfrey, you could possibly type the question in the chat box so that we can be able to pick it up more accurately. But I think the question was about whether I pay one premium. Yes.
Can you hear me now?
That's a bit better.
Can you hear me now?
Yes, that's better.
Hopefully, Emmanuel can also hear me. Well,
yes.
What I was trying to say was that in the package for the SMEs, does each policy have a percentage as an entity, or the percentages are aggregated as per the package?
Okay. Now, thank you, Chigwe. I don't know, is this Chigwe Grace? Oh, but I know Chigwe Grace. Are you brothers to Chigwe Grace? Our partner at Casita?
No.
Okay, there is another partner.
No, maybe just namesakes.
Hey, okay. This is a packaged plan that we came up, and each section you see is charged differently. It has different rates that are regulated by our regulator IRA. So they are either minimum rates or we use normal rates, depending on the business that we are dealing with. So this is an example we used. And the rate we used, of course, was an average of all the rates we used here. Because if I'm going out fire, I use the rate of maybe 0.225%. Most of these rates are all less than 1%. Actually, all of them, apart from money insurance is down, that is at 1%. The rest are all less than 1%. Yeah, that's why you're seeing the average rate is about 0.7% for all the 7 classes under this package. If we were to add another or to reduce another, you'll find that rate has gone a little bit, maybe up or below. So I hope that is clear, because I'm seeing we're running out of time. All right, thank you.
All right, thanks a lot, Emma, for that submission. And a big thank you to everyone who has joined us. We are very honored that you did. Our recording will be shared. It's usually available on our YouTube channels. And I still see that the conversation, we will have an opportunity to possibly dig deeper into the conversation. Emma, someone has asked for your phone number, so please do share your phone contact so that we can be able to link up with the people who are there. We'll keep the meeting open for a couple of minutes as we wrap up. Usually what we do is to simply engage and keep our conversation. We'll be back next week. Next week we'll be discussing financial records, which ones are key and how do we use them. We'll be hosting a seasoned accountant who has been supporting a number of SMEs to be able to do that. Thanks a lot, and we look forward to seeing you next week. Have a lovely week. Emma, thank you so much for your time, and we are very honored to have you share with us and share this morning with us. Yeah, Emma has shared his contact in the chat box, so please do reach out to him and do follow his page. Do follow his page. Emma, have you placed a link to the page in the chat box?
Yes, I have. I have
Yes.
posted two of them. I've posted one at when I was hosting IRA, the last
Yes.
episode. And I've also posted now one specific to this presentation called the business insurance package.
Okay, super.
So
no worries.
If you can just tap on the chat box, just copy out that thing that I've shared. Then once you can post it to your WhatsApp whenever or whatever item you're using, whatever link you're using, such that you can watch them in your convenient time, because of course we are pressed for time. We can't conclude everything right now.
Super.
And
thanks a lot.
Also Twitter, maybe let me just share my Twitter handle, which is just quickly. But I also want to thank everyone that has come on call. It's not easy to spare some time during a weekday. It's beginning of month, and I don't take anything for granted. That is the Twitter handle. So thank you so much for the opportunity. I hope some people have picked out lessons. I don't just aim to sell, but I aim to rub some passion towards you to really think critically that why should you have a business worth 500 million or whatever amount I've shared? Why would you fail to save up or contribute 4 million to an entity that is going to, we usually use leveraging, we leverage on other claim, what do we call them? Many other, and okay, there is a principle in insurance we call law of large numbers. So we assume, we don't just assume, we know that out of say 10,000, 100,000 clients, business owners, only maybe 10% or maybe 10 of them actually may get an incident. And it is from those 100,000 that we shall be able to pick that money and pay. So if, and we make them, we compensate such that they are able to bounce back. So resilience is very key. It is one of the items that was pointed out. Many of the businesses collapse because whenever they get any single shock, they're out of business. Yet with insurance and these kind of solutions, you would be able to get back into business very quickly. Yeah, you'll be able to bounce back. You'll be able to go on holiday because you know your business is not just relying on that one thing that they have stolen. You're not going to rely on that one thing because there have been floods in your building. That means you are going to totally change your lifestyle. No, insurance is much wider. It helps you, give you that peace of mind. It helps you bounce back. It helps you keep your dignity. It helps you not go and on a fundraising drive. There's so much we have discussed on my page that we can't totally finish here. I want to thank all of you so much for the time and opportunity here. Thank you so much. God bless all of you.
Thanks a lot, Emma, and have a lovely day, everyone. We'll see you again next Thursday.